This is Rod Kusin and Spooman for Risk on May 10th, 2010. All times on the chart are Central Standard Times. Today we're going to look at how our strategy system, in conjunction with gaps on the large S&P contract, made for some excellent trades in the late afternoon. What you have on the chart here is the large S&P contract, SPM10.P, on a 10-tick basis with our group reversal system attached. Now, if you're not familiar with our group reversal system, take a look at our website, RSKsys.com, and check on the details pertaining to reading the group reversal system. What we're particularly interested in here are the placement of the gaps. We have a low gap here and a retracement down into that gap. That made for a nice scalp. A gap down here with a retracement, another good scalp. And then finally, late afternoon, our reversal system picking up long trades right in here with targets here, here, and here. All of these were gaps as the market moved down. So there was some very predictable trades right in here. Now let's take a look at the strategy system and where it picked off long trades at this particular time. Now the first set of long trades came in via chart number 3, and in this particular case this is strategy number 4. This is a real easy strategy to get into a move where the market tends to be trending. Okay, now let me show you what the settings are for that particular trade. This is the easy 4 strategy. We are not using group reversals on this strategy. We're just looking to go long, and we're filtering that with both stochastics, crossover, as well as overbought, oversold zone, using these first 3 tick bar intervals, 2 out of 3. But we want to make sure that we're crossing over on a 700 tick bar. And that's why we have the secondary setting in here. Now that's the setup. We're not using bank or any other setting on this particular strategy, so it's very easy to get a long trade. But we were very confident that this trade would work due to the fact that we had those gaps. Now, interestingly enough, we have confirmation of those trades off of chart number 1, strategies 1 and 2, that picked off long trades right in here. Let me show you the settings for that. And here we have chart 1, strategies 1 and 2. We are using group reversal system, the group reversal system there, and slightly different settings for the use of the stochastics. 1 out of 3, 1 out of these 3 for a crossover, and 1 out of 2 either at 1100 or 2580, using both a crossover and a 4060 zone, along with bank in a 2080 zone. Chart 2, or pardon me, strategy 2 used the same 3, 5, and 700 tick bar intervals, 2 out of 3, using both a crossover and a 3070 zone, and only a crossover on one of the 2 here, and a slightly narrower overbought, oversold zone on bank for strategy 2. And there were your entries. So now here are the actual entries, and we set up limit orders at the gap fills to exit part of our position on the way up. So we exited some of our position very early on the first gap fill, the second gap fill, A little more of our position was exited here, and then we let the rest ride until we got our next gap fill here and a final gap fill here, and then we were out of our position. But that made for some very highly predictable trading. Now, another way we could have allowed the system to work rather than to take profits at gap fills is to simply wait for the strategy to tell us where opportunities existed to exit the trade, and that didn't take place until quite a bit higher up in the rally. Here we have two short signals, one here and then again right in here. Automated exits based upon strategic analytical settings here and here. So always more than one way to get the job done. And here is the strategy performance report off of chart number 1. Lots of trades taking place here. And here's the performance report off of chart number 4. Much fewer trades, much more predictable trades as well. Now, in the time remaining, let's take a look at a couple of other trading opportunities. We mentioned that as the market rallied up strong out of the gate, it left a gap down here. Now, that gap was down at approximately 1156.50. Of course, this being the large contract, 1156.50 roughly. Notice where the strategy pulled the short trade. This is chart 1, strategy 2 and 3. That takes a short trade right at the high. Perfect trade. Remember, 56.50 was the ultimate goal on a gap fill. This strategy had a 6-tick profit target automatically set up for it. So you could have either taken it there or just waited for the gap to be filled, which it does get filled here, right in here. And oddly enough, we also have a couple of exit trades, these long trades coming in right here as well. That happened on strategy 1. Another opportunity would have been to short this rally, given that you had this gap below the market at approximately 1150.75. It's right at about 1150.75. So shorting it somewhere in here. Let's see where the strategy shorted it. And notice that's coming right into about 11 o'clock. Now here on strategy, pardon me, chart number 3. The easy 4 strategy. Chart number 3 gets us into some short trades, back into long trades, and then right into 11 o'clock short trades again. Ideally holding this down to the gap fill. And here are some entries off of chart 1, strategy 1 and 2. Shorting it here, reaching a profit target, again shorting it here, and hitting profit targets, but again our recommendation would have been wait for the gap fill. And finally here in chart 4, strategies 1, 2, and 3, firing off long trades right in here. Good profit potential on those trades with exit right in here. Okay, so just in review, the concept today was to use the strategy for entries into gap fills that we see on the SPM10.P contract. Very profitable, very high probability trades using that particular system. So we ask you to come and look at our website, ask for a demo, and join our team of very profitable traders. And this is Rod Kusin and Spoon for Risk.